Back, everyone. Today we're going to answer three simple questions. Where were we? Where are we? And where are we headed? Quick overview of last setups. Let's see if any came into fruition. And then we're going to move on from there. So at time of the last stream, what we mentioned was that, hey, we had this PO3 at the top. We had manipulation. Accumulation, manipulation, followed by a bearish expansion. We've come all the way back and we've come right into the zone. But I remember last stream we said we're in this range, but the price action in this range is quite turbulent. Because it's turbulent, it doesn't make sense to trade at the time. Be patient, wait for your opportunity, and then pounce. So we waited for the 30-minute zone to get tagged. It did get tagged. Did we get a tradable entry off of that tag? I don't think so. Our other long opportunity was actually the rotation from the range low, which is what we see here. So let's just play it and see how we got on. Exactly. So we got movement from the 30-minute zone. I suppose that was tradable, but you might have been hesitant with that for reasons we're going to discuss in a moment. The reason being, you did come deep into the zone. However, the market structure flip would not have taken place right up until there at 11629.279, meaning your retracement would be around here. Okay. And if your target was simply the range high, you may not have wanted to risk that. But anyways, that regardless, if you enter that trade, it would have been a profitable trade, as we can see. Whether I would have entered that trade, I might have been a bit hesitant, but still a profitable trade. That setup worked quite well. This one, the short from this region, not entirely. That zone didn't play out the way we expected, and we've now consequently broken out from this range. We've had a retracement back into that zone, and what looks like a bullish continuation up. So let's see. Let's delve into that particular trade in a bit more depth, and let's see, did we actually get a nice tradable entry based on market cipher on the lower time frames especially? So as we play in that range, okay, we were anticipating a nice market structure flip. So we drop down to the 10-minute. 10-minute is an ideal time frame to look for a flip, because you're less likely to get fake outs on the 10-minute than you are to get fake outs on the 5 minutes, than you are to get fake outs on the 3 minutes, than you are to get fake outs on the 2 minutes. That's how these time frames work, and that's how you should trade it. We have the 30-minute zone. We're waiting at that zone, waiting patiently. We had this crazy bit of price action, and I'm sure a lot of people got stuck here because price decided to accumulate here before it decided to rotate up. And what it wanted to do before rotating up was just to get some juice from this demand zone before it did that. So we had a lot of wick action at the top, wick action at the bottom. This is not usual price action. If you got caught here, if you lost 1% here, don't beat yourself up. It's okay. It's actually fine. All right. This is not usual. If you look too long here, I don't blame you, right? Because you saw the second tap. In fact, you might have even seen the third tap, and you saw close at that range high. So I don't blame you. All right, you win some, you lose some. You're not going to get 100% hit rate, are you? As I say all the time, professional cricketers, professional baseball players, professional tennis players, they do not hit or get the perfect strike 100% of the time. All right, what they do is they say, all right, based on my proficiency, if I hit the ball 30% of the time, I know it's going to be a good hit. And that's what they work on. They master that 30% when they hit the way and they actually hit the strike. Perhaps for tennis players, a bit more. You're looking at maybe the 60 to 70% as far as getting that first serve in. But hey, that's the nature of the game. So definitely set your expectations based off of that. All right, so we are here. We've dipped back into that zone. Now, I've not seen this yet. I'm going to just do this live and tell you what I think, because, all right, on the way down, our market structure is telling us, well, we have a lower low, a lower high, and a lower low. So in order for us to entertain this trade on the 3 minute, on the 5 minute, we can't necessarily entertain it on the 10-minute. We definitely can't on the 15-minute. Why is that? Because your fit. Let's just change this. Let's change this to a thickness of 2. Let's make it black. Okay, and let's get rid of that arrow. Okay, good. So to entertain this trade on a higher time frame, let's say the 15-minute, you would be waiting to lose this level here, up here. That's the key level to lose up there at 116272. All right. But if you wanted to risk it on a 5-minute, yes, on a 5-minute, it would have given you a better entry. By better entry, it means an earlier break. This would have been a level you're looking on the 5-minute. That is at 115932. Let's see what happened. Price played around. Price came back up. Has price broken structure? Well, on the 5-minute, yes, we've had a 5-minute close. You can see that 5-minute close where this bar trades and closes higher than that threshold that we were watching. The threshold is right there. It's not a convincing close, but it's a close nonetheless. Okay. Did we come back down? No, we didn't. We didn't. So if you were looking for that as a close, the way you would have played that, all right, this exact region is I'm going to give you at least 3 methods you could have entered this trade. And they're all with varying ability and varying experience. Method number 1, get your fib out from this low to the high, all right, and just look to enter at a proficient fib zone, perhaps a 50% zone or the 618 zone. If you're lucky, the 786 zone. The deeper it retraces, the higher your risk to reward. However, the deeper it retraces, the higher the probability that it's actually not a high low. So just bear that at the back of your mind. So what we would have had here is an entry around there, stop loss there, and we would wait to see what happens. That's how we would have entered that trade. Very simple. All right, that's really easy entry model you might want to add to your toolkit. Okay. Bitcoin especially loves the 618. You can backtest it. It loves the 618, and you can see it, touch it, and tag it time and time again. This one just about tagged it. So that is trade number 1. Entry model number 2 is you say, actually, I'm not going to enter off the 618. I'm simply going to enter on the close of that that break of structure where we start to get an overshoot of that threshold. And what I mean by that is you enter on the close of this bar here. As soon as you see the price close above your zone. Now, as you expect, your risk to reward on that trade is worse. So that's a more expensive buy. It's going to cost you more to enter that trade. And it's going to cost you in terms of your reward. All right. It's a more expensive trade, that one. The next model, and this is for more advanced traders, is to actually say where is the most likely place to get that entry. Now, I haven't seen this chart. I don't really know if we have a zone in here, but I would be looking for a supply zone, perhaps a demand zone within that level. And it's not all the time you get it. And sometimes when you do get it, it's not all the time price tags it as it looks on this in this case. So just for demonstration's sake and for argument's sake, let's assume this was a zone over here. Let's assume there was a nice zone here. I'm going to paint it gray. And let's assume that this bar here was black. Okay, and it was or some of you know how to find zones, but I'm hoping at this point, if you trade the way I trade, you know how to find zones, right? There you would look to enter on that zone. Right now, if you're really advanced, now sometimes being an advanced trader works to your disadvantage. The reason being, advanced traders tend to overcomplicate things. They tend to look for confirmation after confirmation after confirmation. But if you were looking for that reconfirmation, what you would need to do is just watch the market structure on the way down, lower high, lower low, lower high. This is on the 1 minute, lower low, lower high, lower low. Where do we get a break? Where do we get a signal that price is about to bounce up? Bang. This is exactly where we get that break. So you may have wanted to say, actually, do you know what? I'm going to enter the trade on the close of this bar. Again, you're better off than the person who entered. You're better off than trader 2, all right? But you're not as good off as trader 1. Okay, so that would be that trade. That's that person. That's where they got in. Okay, so you can compare the risk to rewards as far as the different traders. Okay, you've got trader one, trader two, trader three. Okay, so as you can see, sometimes waiting for the reconfirmation, yes, it's great. You have more confidence in your trade, but it's not always going to yield you the most results, the most profit. All right, it's your money, it's your hard-earned cash. You decide how you want to trade. It's my job to let you know what your options are, and those are your options. That's exactly how I would have played those markets right there. All right, now let's say you entered that trade. I'm pretty sure you would have been in decent profit by now. Let's just play that. So price carried on up, gave us a nice decisive move up there. And yeah, off you go. Off you go. Now price is flirting in this zone and we're waiting to see what happens next. All right. But if we do a risk to reward analysis, which you should always be doing before you enter your trade, you should be looking to see what is my potential gain here? How much do I stand to make here? And use that as a metric to say whether you should or should not enter the trade. That's a good way to look at it. But however, it is worth noting here that we have, as we can see, multiple taps at this low, multiple taps, which made this even a tougher model to trade. We had tap number one, tap number two, tap number three. Usually after tap number three, off you go. That would have been nice, but we also came back for tap number four. That's why don't beat yourself up if you lost out on this one. And after that tap number four, usually Bitcoin tends to rotate downwards, but in this occasion, it said no, 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 no. I'm going up. Okay, so definitely keep your eye out for that one. Now, where are we and where are we headed? Well, this is where we are. Price has said I'm going to continue going up. Okay, but I'm going to slow down for a bit. So we're currently in a region of indecision. Okay, and we are approaching another range. Remember, Bitcoin loves ranges. It ranges over 80% of the time. So if you don't know how to trade these ranges, you are giving up on some juicy, juicy profits. Juicy profits. So here we are. Are we getting another PO3? Imagine that. In this, we've just had PO3 after PO3. We had a PO3 over here, a reverse one, a bullish PO3. Then we had a bearish PO3 to come down here. All right. And it looks like, well, you could actually think of this as a PO3 to be fair, but I would be hesitant to do that. But it looks like we're getting another PO3 here. And what do I mean by that? For those of you who were here yesterday, you know what a PO3 is. You've got what we call an accumulation or distribution, whatever takes your fancy. I'm not going to color code it today. Followed by a manipulation phase, and after that, potentially an expansion phase bearishly. Okay. Now, this would be a decent place to look for a short. And usually, when you get these PO3 plays, the expansion is relatively aggressive. Look how aggressive that was. Look how aggressive this was on the way up. It's relatively aggressive. So, how am I going to play this range we are currently in? Well, easy. Very easy. We know how to play ranges. We've been doing this for a long time, and we know what the options are as far as Bitcoin's movements. So, first of all, I'm going to be looking for deviation plays at the bottom of our range. Standard procedure. You can probably tell what I'm about to say. And I'm also going to be looking at deviation plays from the top of our range. Classic. Now, in the case we break out from the range, all right, if we start to close above the range, inevitably, I would like to enter that continuation play over there. The same thing on the way down, all right? Now, the question is, what's more likely? Are we more likely to come down for this long or for this short? Well, what I'm going to look at in that sense is what's the market structure telling me from this range low all the way to the range high. So let me hop onto the 10-minute. I don't like the 10-minute. I'm going to look at the 5-minute. And I'm going to trace the market structure. High, 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 low, high, 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 low. We've got high, 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 low, high, 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 low. All right. So this is the structure at the minute. It's not the most pretty structure. It's not smooth. It's not nice and beautiful and lovely candlesticks all the way up, but it's the structure regardless. All right. Now, at the moment, we're actually building up for quite a nice play. And I just want to check something quickly. I can see that this bar, the high of this bar is 117,800, and the high of this is 117,794. So it's quite interesting there because on Bybit, which is where I'm trading, this high has not quite been engineered. Okay, it's kind of unengineered. Let's call it UG. Not only is it not engineered, it's also confluent with the high of this wider range, right? So could price do something like this? Could price come back up, create a nice bar there with a wick that takes out both this range and the range at the top? So a nice wick like that. If we got something like that, that would be a juicy short, in my opinion. So that's why I'm going to be looking out for that trade. So I'm going to be setting alert number 1 there. All right, so I know what happens as soon as we get there. One alert should do the job. Also, what's the reason we could come down? There are a few reasons we could come down here. Reason number 1, we've developed this beautiful, beautiful curve of liquidity. As we can see these stop losses, We took out some of these stop losses, but we've got these guys on still in the game. All right. As far as your market structure goes, these are nice points that we could engineer, reason why we could rotate back down. And if you go to the higher time frame, don't forget we're looking at the global environment because that predicts what's going to have in the local environment as well. We know that on the daily, we've got high, 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 low, high, 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 low, high, high, a flip in market structure. So when we have a flip, what do we expect? We expect a retracement. Now, like we said yesterday, is this a retracement just to facilitate that next leg down? And if that's the case, where is that gonna take place? Well, I've got some ideas as to where I think that could happen. Number 1, it could actually happen at this fib retracement zone. I'm not a big fib lover, but it does work. And this fib zone is what we can see here in this green box. All right, that's what we observe here with this green box. This is our fib zone, and we have officially tagged into that zone. So is that an unrealistic place to rotate down from? Of course not. All right, and we've tagged it, so we are watching that zone. Is it confluent with this 2-hour zone? Not yet, but could it be? Of course. All right, so this is giving me good vibe about that short trade from the zone. Very good vibe. Now, not just that, let's see what the volume profile is saying from this high to this low. Now, the volume profile is saying that our value area low isn't telling us much, nor is our POC, nor is our value area high, because we seem to have traded above that. So that's not helping us. All right. Now, okay. Well, we've reclaimed back into this range. So if we extend our range now, all right. But because we've reclaimed into this range, we could extend this. We could extend this range here. We could, but I would like to leave it there just to remind me that we did break down. But I also want to see what's the volume profile from this high. First of all, to the point where we broke out from this range. Again, we've got POC coming in at that zone. Look at that over there. A nice PO point of control. So I'm going to exemplify that and just label it as a POC. This is our POC, adding confluence to that zone. So today I've got a bit more time to go into more depth as to how I plan these trades, but that is a very useful tool, understanding where that POC from. So again, not only have we got a supply zone in there, we've got our fib region in there. We've also got these liquidity points, all right, it's not necessarily in that zone, but it's close to that zone. So if we are to get a reaction, I think it's likely going to happen here. If it doesn't happen there, I think it's going to happen from this zone. And if it doesn't happen to that zone, I think there's a chance of coming up here. Then we're looking at this range high. Then we're considering potentially a 3-tap model, 1, 2, 3. But why would we go for a 3rd tap? All right, if we're going to break down, from this range, it doesn't really make sense. Have I seen it happen? Yes. Okay, but is it less probable than just a lower high printing itself? Absolutely. That's how we're playing this. That's my next trade. We're basically there. We're waiting to see what happens. And we should have that result I believe in the next 12 hours. We should have that result in the next 12 hours. Okay. And that's kind of it for me. Now there's always trades you can take. There's always plays you can take in the market. But are they the most are they the best trades to take? That's a different story. A lot of the times what beginner traders do is they make a good trade followed by three bad trades. They make a good trade followed by four bad trades. So what the equity curve ends up doing is something like this. So this is profit, that's your y-axis, and this is time, that's your x-axis. What it ends up doing is good trade, bad trade, good trade, bad trade. Sometimes good trade, bad trade, and then sometimes bad trade. Then they're coming back up. And this is the result of over trading. If you just wait for your levels with the highest predictive values, the highest predictive probabilities, yeah, what you're going to see is you're going to make good trade. Maybe good trade. Good trade. Good trade. All right. That's what you want to see. Okay. Anyways, enough of that lesson. I will leave things here because I genuinely don't think there is much more to talk about. There is not much more to talk about. In the case that we do burst out of this region, this zone, I would just look to enter it on a continuation play. Right, just be careful, but we do have another zone here, so I'm going to extend that now, and ultimately we have one more zone there. All right, so watch out for that. Be careful, trade responsibly. Make sure you're practicing good risk management. Make sure you're de-risking your trade as soon as possible. Make sure you're taking profits where you should take profits. Make sure you're closing the trades if you are going to close the trade. And don't be sipping on that hopium. Don't think your trade is always going to keep going up and up and up or down and down and down. It's not. Stagger your profits, secure your bag, and keep it stepping. All right? Well, we'll leave it there today, and I will most likely see you tomorrow.